The demand is coming from the growing economies. It's coming from India. It's coming from China. It's coming from Europe. LNG now from the United States competes in Europe. The cost structure is such that US LNG can compete. It's not a destination of last resort. It is a competitive fuel into that market. These are some of the big shifts that we've seen in the LNG space. So where's all the supply going to come from? And how's that going to be impacting the US LNG? So in the last 5 years, we've seen about 150 million tons of new supply. In the next 5 years, that's only around 60 million tons if you look at the data we have in front of us. A huge number of projects have been delayed or have fallen off. And to quote my business partner, Sharif Suki from Tellurian, this morning on Bloomberg, he said, and I'll quote him exactly, "The system is tight, the oversupply is gone, and we are now in the danger zone." And isn't that just the case, as we saw a cargo traded for $37 per million BTU yesterday, a price that we have never seen before. But it's also the year, of course, in 2020, where we saw the lowest price for LNG that we ever saw of $1.80. When did we ever see that? We never saw that price either. So we've had this extraordinary backdrop, but it's leading us to the place that we always knew we were headed to pre-COVID, which is that the market is getting tighter. And how much has that not been demonstrated in the last few days? So the United States, it's an enormous potential supplier. It will be the largest LNG supplier globally by 2025. We've got over 50 years of production available at less than $3 per million BTU. It's a 90 BCF a day market, which is producing gas from basins like the Marcellus, the Haynesville, associated gas from the Permian Basin that everybody talks about with the linkage to oil and so on. And the role of LNG from the US will expand. So, don't blink. The US is coming, more LNG is coming. And the conditions for the market are right for the US LNG, and particularly for projects like Driftwood, which are very, very low cost. An integrated project, a reservoir to customer project, $3.50 into the boat, $3 FOB, $1.50 of variable cost, globally cost competitive, attenuated volatility, no commodity price linkage. So this big market, this global market, including the developing economies, for which we have to solve the energy poverty and energy security issues, can be satisfied by low-cost LNG coming from the United States. It'll come from other places too. But of course, the subject of my talk today is the US LNG, and that's where I'm focused. We can sell all day long on a competitive basis into Europe. And of course, as we've seen in recent days and in recent hours, this huge opportunity into Asia. Above all, low cost matters. In the energy transition, in the supplying gas to the world, to the global population, cost will matter. Affordability, accessibility, energy security, the key watchwords of what it is we are trying to deliver. So in my 1 minute and 15 seconds, let me just draw this to a close. The world needs sources of affordable, available, and cleaner fuel to deliver clean air at the outset. Global energy is growing fast. The world's energy needs need to contemplate all of the consumers, all 8 billion of the people who reside on this earth. The markets are growing fast. India, China, Southeast Asia. These LNG markets are growing fast. 3% growth per annum implies a doubling of the LNG trade to somewhere north of 700 million tons per annum. We should not, nor ever, doubt the role of gas. The energy needs of the entire 8 billion people on this planet, as well as the energy transition, will be underpinned by gas because it has to be. I'll stop there. Annette, over to you.
Thank you, Martin. Very convincing and some very true points. I agree. Just touching on what is so topical at the moment with the enormous gas increase, the pricing of gas, almost an increase of 150% in just over a few weeks. You said not only is it because of a tight market, but we're looking at a very cold snap of weather, which is covering Europe and also Asia, which are two major regions that import gas. Moving on from that, so the liberalization of the Chinese market, sort of what are the top three changes do you think that the Chinese liberalization could have on US imports in 2021? What would be the challenges there for US gas?
Well, I think look, there are a number of issues that we have to think about with respect to China. One is, US-Sino relations, which is going to be very topical with the incoming President Biden administration. I mean, that's going to be top dead center for policymakers and for for all industries, not just the energy industry. Of course, in China, liberalization, access to infrastructure, particularly LNG import facilities, of course, those are key. But certainly from my standpoint, I see those things moving very quickly. I see China opening up the opportunity for LNG suppliers to supply more LNG to a market which is clearly demanding more gas, and which is not entirely rebasing its economy on gas, but is certainly making gas an important part of the mix. As we're seeing in India. I mean, the same applies, if I may, to what's happening in India, where President Modi has made some bold statements about the gas in the energy mix, about the investments in infrastructure, about new facilities and so on. I mean, all of these are contributing to the opportunity for LNG to put gas into these markets. And of course, part of what I'm trying to illustrate here is that it's not just, it's gas for a reason. It's not just gas because it's fuel. Gas has got, qualities which transcend the fuel itself in terms of its availability, its cleanliness relative to other hydrocarbons, its affordability, and so on. So, all of those things contribute to a huge opportunity for the gas industry globally. I mean, not just the United States, from all parts of the world.
Absolutely. A question from the chat. So who are the winners and the losers from the record off the charts LNG prices in these last few weeks? And what's the legacy?
Well, the legacy, I think, is, for me, I think what makes me feel so buoyed up by this. I mean, I didn't have a cargo to sell at $37 a barrel. So somebody did, and, hooray and well done to you. But, for me, it's restored the confidence in an industry that I think, having touched the lows of $1.80 in spot pricing in the midst of COVID, really was having difficulty in understanding where its future lay. And it's always important in any shock, be it a down shock that we saw in COVID or an up shock as we've seen in the last few days. It's always important to step back and look at the fundamentals. What are the fundamentals telling us about demand, supply, gas as a fuel in the mix, the energy transition? And once you do that, and in the 10 minutes I had, I tried very quickly to compress all that into one place. That gives you the setup for gas and LNG. So who are the winners and who are the losers? Well, if my friends in the LNG shipping industry had available tonnage that wasn't committed and they managed to put something into it, well done and happy days. Anybody who had cargoes on the water uncommitted, of course, has done well. But the bigger point, Annette, is really about what it's restored the confidence in our industry. And, wasn't it just that this industry needed, an injection of something, to make it feel better after, 2020, which, whether you've been in oil, gas, LNG, has been one of those years that you absolutely want to forget and hope it never comes around again.
Right. It's always at a critical moment that you least expect it, that you get this kind of spike. So very interesting. Another question from the chat, moving more into Africa. What is your point of view about the competitiveness of the West African LNG business, especially the recent discoveries in Mauritania and Senegal, prospect with monetizing plan by BP and Cosmos via nearshore FLNGs?
Well, look, it's hard for me to comment on specific projects, but I will comment, more broadly on, the big points which I made, which is that cost matters, So if these projects are able to deliver into the markets, clearing the forward curve that we're seeing today. So, as you look out through Cal 1 through 24, but on JKM, which is offering you something around $6 with bumps, or TTF, which is offering you something like $5 with bumps, plus or minus. If you can clear those prices, bring it on. Because, I'm not going to sit here and say that the market belongs to the United States as a low-cost producer. What I'm going to say, as a spokesman for the industry, is we are capable of supplying the energy needs of the world, and we are the rightful supplier and the rightful partner of renewables. And if these projects are able to clear the market and deliver low-cost gas to the consumer, then they absolutely belong in the mix, and they will assess their competitiveness on that basis. It's a really quite simple equation. Cost matters. We must never forget that.
What are the top 3 changes you expect to happen in the US LNG markets this year as President-elect Biden takes his seat at the Oval Office? We hope, keep our fingers crossed, nothing else happens between now and then, on January 20th. What impact will his climate agenda have, which is far greener, of course, than President Trump's ever was? What will that have on the finances appetite for LNG next year?
Look, I think that's a hard question to answer in a short space of time. I mean, it's a big agenda, and Biden's agenda isn't an LNG agenda. It's an energy, it's an environmental, it's a green agenda. But I would say more broadly the following. One, I think we've got a period of actually much more moderate politics ahead of us than we might expect. And I think we have a Democratic party, which is, has, as all parties do, one side and another side. And I think you have a, Republican matched House, Senate, which similarly has people who are on the moderate side and the more extreme side. My sense is that we will get the right policies. We will get policies which give a challenge to our industry to do the right things. Some of the things that we as an industry have not done that we should have done in the past. I think it will set a high bar for our behavior, for our ESG agenda, as all types of energy producers, whether we're oil, gas, or LNG. Will it be challenging from a regulatory standpoint? It could well be, but it remains to be seen. I mean, certainly from Driftwood's standpoint and Tellurian's standpoint, we're fully permitted. As far as we're concerned, we're shovel ready and ready to go. But look, I think we've all, intellectually, I think over the years, been seeking some kind of framework into which we as an industry know we're playing, a set of ground rules that we know are, supporting the industry and give us a collaborative platform with regulators, with governments, for the future. As long as we understand what the rules are, we're pretty good at following them, I think, as an industry. We just need to know what they are, and they need to be reasonable and allow us to deliver the fuel to the customer, as I said, at the right price.
Well, it's certainly no discussion or dispute on the fact that it is part of the energy mix and being seen as the greener fuel, without a doubt, and has legs to run. One final question before I let you go. How long do you think we will see this rally in LNG prices?
Look, Annette, it's hard to see. I mean, I saw, it's always, interesting how fast the commentary follows. I mean, I've seen the word super cycle 3 times, I think, since I got up 3 hours ago this morning. Are we at the beginning of a super cycle? There's no doubt, just from an intellectual standpoint, if you starve an industry of capital and people still want your products, and clearly people are telling the industry, we want your products, we want your oil, we want your gas. And if they continue to demand our products, and if we starve the industry of capital, prices will go up. I mean, that is a racing certainty. So, if we get the right balance, then, we'll see moderate prices. If we don't, we'll see high prices. I think there is every opportunity for, much higher, oil prices in due course. But I think the important point is volatility. That's what we've seen in the last few weeks. Steep volatility. And of course, that's what people don't want. What people want is predictability. And my sense is that if we can get the policies right, if we can get the frameworks right, and if we as an industry can deliver against those requirements and deliver low cost, then we will see, a world which becomes more moderate. But unfortunately, in the short run, my sense is that volatility is here to stay for a while, and we're going to have to live with it.
Okay, Martin. Well, on that note, thank you very much for your time. Pleasure to listen to your insights, as always. And I'd like to thank our attendees around the globe for listening in as well, and to let you know that we will be following shortly in our plenary session with the interview with the OPEC Secretary General and Bloomberg. So thanks again, and hope to see you soon, Martin, in person.
Thanks.
Thank you.
All the best.